So you see the news, right? The stock market's plunging, and you hear these terrifying numbers, trillions of dollars just wiped out. But have you ever really stopped and asked yourself a super simple question? Where does all that money actually go? Well, that's exactly what we're going to unpack today. It really is the trillion-dollar question that the headlines are designed to make you ask. And honestly, getting your head around the answer is the key to not freaking out when things get choppy. I mean, you've seen this a million times, right? $1 trillion wiped out. It sounds so dramatic, so final. It's meant to be scary, and it definitely sparks that one burning question in your mind. Right? So where did it go? Did it just vaporize? Is there some giant vault somewhere that suddenly filled up with all this lost cash? Let's get to the bottom of this. Alright, so here's the big reveal. The answer to our question is actually super simple. And it's probably not at all what you're thinking. Yep, that's it. It goes nowhere. The money doesn't physically move, it doesn't get transferred to some secret account, or just vanish into the ether. So, if piles of cash aren't disappearing, what is? Okay, so what is disappearing is something we call market value. And this is the part that trips everyone up. A stock's price isn't a stack of cash, it's just a number that represents what everyone, collectively, is willing to pay for that asset at this very second. It's all about perception, not physical dollars. Okay, so if money isn't actually moving, how does all this value just poof, disappear? Let me give you a super simple analogy that'll make this click instantly. Think about it like this. Let's say you own a house. Last year, the housing market was on fire and your house was valued at $500,000. This year, things have cooled off and now it's valued at $450,000. So did 50 grand in cash literally fly out of your wallet? No, of course not. You still own the exact same house, the same bricks, the same roof. The only thing that changed was what people perceived it was worth. Okay, but wait, you might be thinking, every time someone sells, someone else has to buy. So if I lose money on a sale, doesn't the other person automatically gain? And that's a great question. The answer is kinda, but not really in the way you think. Look, if you bought a stock for $100 and you panic sell it for 80, then yes, you just lost $20. The person who bought it from you now owns that stock. But those massive trillion-dollar losses you hear about, that's not about individual traits. That number reflects the new lower price applied to all the shares in existence, even the millions of shares that nobody sold at all. So if it's not a case of money just vanishing, what's really driving this huge collective repricing of everything? Well, the answer isn't in some bank vault. It's in our heads. It pretty much boils down to a few key things. Fear is the big one. Bad news gets out, it spreads like wildfire, and people rush for the exits. Sometimes it's more practical. Big funds just need to raise cash, so they're forced to sell, which pushes prices down. And sometimes it's just that our expectations change. Maybe a company isn't growing as fast as we hoped, so we're just not willing to pay as much for its stock anymore. And this is the number the headlines love to throw around, right? It's massive, it's scary, and it's designed to grab your attention. $1 trillion gone. But here's the secret you now know. That scary number, it's just simple math. It's the total number of shares a company has, multiplied by how much the stock price dropped. If a company has 1 billion shares and the price falls just $1, boom, that's $1 billion in lost market value. But nobody actually took $1 billion out of the bank. This quote just nails it perfectly. When you're looking at a stock chart going up and down, you're not really looking at money. You're looking at a graph of collective human emotion. All our fear, our greed, our hopes for the future, all quantified into a single number. Okay, so knowing the theory is great, but what does all this actually mean for you and your investments? How do we turn this knowledge into something useful? Pay attention here, because this might be the most important takeaway from this whole thing. As long as you still own your stocks or your house, your loss is unrealized. It's on paper. It's an emotional gut punch for sure, but it's not a real financial event. The second you hit that sell button, that's when it becomes realized. That's when you've turned an idea into an actual financial loss. So, how do you actually survive the chaos? Well, first, just keep repeating this to yourself: the loss is not real until I sell. That simple idea is your shield against making the #1 mistake, which is panic selling. That's the only thing that guarantees you turn a temporary drop into a permanent loss. You have to remember that real long-term wealth is built on patience, not on trying to perfectly time the madness. And if you look back, history totally backs this up. We saw it in the 2008 financial crisis, we saw it again with the crash in 2020. Every single time, the headlines screamed that trillions were lost forever. And every single time, once the panic faded, confidence slowly came back and the markets recovered. So the next time you see one of those scary headlines, just remember this. Markets don't destroy money. They just reprice assets. It's not a fire that turns cash into ash. It's more like a giant worldwide sale where everything has been temporarily marked down. The assets are still there, the companies still exist, they're just on sale. So really, maybe we've been asking the wrong question all along. The question isn't where did the money go? The much better question is, who understood what was really happening, stayed calm, and was able to see the opportunity when everybody else was blinded by fear?